the direction of oil prices continues to decline with that impending sell signal that we're getting oil prices, that's going to suggest also that yields are going to fall here over the course of the next few weeks. Here's what you need to know before the bell. Talked about previously, we had added some exposure to our energy stocks back when energy was very, very beaten up. And we said, look, we'd been through a very big correction in oil prices, something would happen, and you'd see a pickup in oil prices because of whatever reason. That's exactly what happened. And of course, as oil prices go up, interest rates also go up because there's a very high correlation between oil price and interest rates because of the impact on inflation expectations. And so again, not surprising, there's a decent correlation between the direction of interest rates and oil prices. So a lot of people are like, I don't understand why interest rates are going up. Well, it's because a lot of it was oil prices and the inflation expectation from higher oil prices. That rally got very extended, got very overbought, and has now flipped, of course, with news out of Israel that they're not going to target oil fields in Iran. That's basically changed the tenor of oil prices. Those have dropped rather sharply here over the last few days, triggering a fairly high level MACD sell signal. This suggests that oil prices could travel lower here over the next couple of months. And again, at the end of the year tends to be a little bit weaker for oil prices anyway. So we're going to potentially see weaker oil prices here. That's going to translate, obviously, and this started yesterday with that drop in oil prices. Of course, the bond market was closed on Monday, so the bond market didn't really get to respond to anything until yesterday. But yesterday we had a fairly decent increase in bond prices, sell-off in bond yields, working off some of that overbought condition. But if the direction of oil prices continues to decline with that impending sell signal that we're getting oil prices, that's going to suggest also that yields are going to fall here over the course of the next few weeks. That wouldn't be surprising anyway. We kind of had a very extended overbought condition in yields previously. That, again, it's kind of an inverse relationship. They've now gotten very, very oversold. So now, again, what you're looking for is just that technical reversal that'll occur in both bond prices as well as oil prices, because again, we're just working through that process. What's going to happen ultimately is that as the impact of inflation fears continue to decline, that's going to be supportive of asset prices. Markets, though, as we talked about yesterday, still overbought here. That sell-off yesterday, we had gotten overbought, as we discussed earlier this week. And again, we're still in a buy signal here. So again, but that buy signal is at a fairly high level. And as we talked about yesterday, doesn't mean you can't get a correction even though you're in a very bullish trend of the markets. And we're still within a very defined bullish trend, but a correction back to the 20-day moving average would not be surprising here. So again, if you're looking to add exposure to your portfolio, you might want to be a little bit patient for a couple of days. We are going to be moving into earnings season. This morning, ASML, which is in the semiconductor space, lowered their guidance. That stock's going to be down fairly sharply this morning. That's going to drag the entire semiconductor sector down this morning as well. That's going to pull the entire tech sector down as well, because they're also linked together. So again, do expect weaker markets this morning, but that wouldn't be surprising. Again, we got to work off some of this overbought condition before we'll have a better opportunity, potentially over the next week or so, to put some new capital to work. But that's kind of just navigating markets right now. But again, right now we're looking to be in a good position, lower yields, higher bond prices, potentially a correction in stocks with a better entry point by the end of the month. We'll kind of measure how it goes. That's what you need to know before the bell this morning.